Hi guys, Mortgage Mark. Let's talk about escrow accounts when buying a home. So if you think you're going to get an escrow account and you're buying that mortgage, here's what you need to know. And I'm going to give you kind of the basics, and then I'll tell you how it's really done. So the basics, if you're playing at home, just realize this. They're going to collect, mortgage companies are going to collect 1 month of your homeowner's insurance out of the gate. So 12 months, a full year's premium. So you guys get to pick that. Find who you want to use for insurance. They're going to tell you your premium is X per year. That's what's going to get collected at closing. So that'll get paid at closing. And if you've prepaid it because you're just an eager beaver, let us know. Send us the paid invoice. We'll make sure it does it, but it has to be paid by the time of funding. So realize we will pay for it at closing. That's 99% of what we do. The escrow account will then come where they'll collect roughly 3 extra months of insurance as well as 3 months of taxes. That's the easy math. That's the doing it at home math for you guys to calculate. So in your head, think about, okay, if insurance is X per month, then just 3X is what they're collecting. And if your taxes are Y per month, then just 3 times that monthly amount is what they're going to collect for the escrow account. So again, first year's worth of insurance goes out the door to the insurance company. And then your escrow account is going to be 3 months of taxes, 3 months of insurance. That's how you calculate it on your own. Now guys, the reality is it's more complicated than that. When we set up an escrow account, we are regulated by the federal government on how much we can keep, like to the penny. So what you'll see on your closing disclosure, your closing statement, is you'll actually find, okay, it's 3 months of insurance, relatively easy, but the taxes will change. The taxes may show like 8 months, but you'll find that the sellers, let's say 8 months is getting collected and it's for a closing in May, the sellers will prorate you January 1 through the May close date so that your net is about 3 months. And then to add one more level of complexity, there's what's called an aggregate adjustment, and that fancy formula that tells us, the lenders how much to collect. There's going to be some like credit coming back to you to make that number perfect. Sometimes it's big, sometimes it's small, but guys, just know that it exists. And people are, for the escrow accounts, if you're not sure why you need one or should you have it, there's a whole just escrow overview video we have that explains in more depth. But if you're trying to figure out, hey, just on your own, what's my escrow account going to cost me? 12 months of insurance goes out the door, and then the real escrow account is going to be 3 months of insurance, 3 months of taxes. If you got questions, let us know. Certainly we can help you get like to the penny exact if you know those numbers, and we are certainly here to help.